And now we go to Jenny Horne, host of Next Gen Investing, and we're looking at a lot of names. Now, how about we start with AMD? Some pressure there, some of the details. Good morning, Jenny.
Good morning, Nicole. And I know that this is one of the headline earnings movers, and so there's a lot of focus and scrutiny, frankly, around its move to the downside. But I will say that we actually initially rose on the back of these numbers. So I think that better than expected revenue was a huge reason that we initially saw some positivity. But investors were likely looking just for more upside as the stock has risen pretty substantially just over the last quarter alone. We saw them report second quarter adjusted earnings per share of 48 cents. That was in line with estimates. Revenue also came in $7.7 billion. That was ahead of forecasts of roughly $7.5 billion. But they did also say now they're guiding revenue between around $8.7 billion at the midpoint. That was better than the $8.3 billion that was penciled in by the street. And they mentioned this really robust demand for their AI product portfolio and saying they're well positioned now to deliver significant growth in the second half of this year. So revenue in their data center segment, which is hugely watched, of course, rose about 14% to $3.2 billion from a year ago. Now, as of Tuesday's close, AMD shares were up 44% this year, with a 73% gain just over the last 3 months. So investors have been, I definitely think, growing more optimistic about their MI series of chips and the way that can hopefully compete with Nvidia as far as offering a lower price point. However, the latest AI chips that are competing with Nvidia, which do consist of now the MI350 series, have also been hugely a reason for some of the upside we've seen over the last month. But this data center market has been moving to the full stack, now rack scale solutions led by Nvidia. Back in March, AMD closed its acquisition also of ZT Systems, which gives the company hopefully some more expertise to now help it design rack scale AI servers while incorporating chips, networking, and software in a larger end-to-end system offering. We've also seen names like Alphabet also try to move into this more full stack offering solutions. So for that reason, they definitely said that the release next year for their MI400 series is looking very strong, and they're still in the early stages of this industry-wide AI transformation. All that to be said, though, this was all, hugely positive, but I think that when you have a stock that has risen 70% plus going into these results, you had to really reverse a lot of the doubts and the fears that still do linger with AMD. Because yes, pricing might be a competitive strategy against Nvidia, but I do think that the question then remains is like, why haven't we seen that gap then closed over the last several years? Well, Nvidia has only become more dominant, and frankly, until the last 3 months or so, AMD was looking like it fell behind. So doesn't seem like this was enough, perhaps, to reverse the stark tone on AMD, but a lot of these earnings movers today are seeing some downside on what was still pretty strong results.
Look, the AI trade, the AI story is very much alive. There's no doubt that Nvidia is this umbrella or this sort of roadblock for AMD because, as you said, they just can't catch up. However, it's still such a formidable player. Today, it's down 5%. People still believe in Lisa Su. This stock went from $76 up to $182, folks, pretty quickly after Liberation Day. So that was a nice rebound. But I think there's a hindrance not being able to send to China so easily, and also just, the roadblock of Nvidia. The group overall, I think people are still believers. It'll be interesting. Let's see, I see Truist with a $173 target. That's pretty much where we are. 210 from Benchmark. Morgan Stanley has 168, 190 from Stifel. So it seems to be a mix, Jenny, right?
Yeah, and that's exactly what I've seen as well. So far, I've actually seen price target, Piper Sandler raise its price target. Truist, you mentioned, of course, kept a hold, as well as, Goldman also keeping a hold rating on AMD. So it seems like there's a lot of conviction that is just being maintained. But you're absolutely right. How do you right now compete with the momentous force that is all things NVIDIA, that right now not only has the most advanced of their GPU offerings, they also have the biggest customers. A lot of these accounts, are massive enterprise accounts that don't just, flip to AMD back to NVIDIA. They're more stable, long-term contract deals. So it's not like we could see this sort of flexibility of customers right now moving from AMD to NVIDIA or vice versa. And AMD also trades at roughly 35 times its forward earnings. So you have to be able to put up earnings growth to justify that multiple, which is relatively expensive. I mean, you look at it right now, AMD versus Nvidia as far as market cap, because I know we discuss Nvidia a lot with its $4 trillion plus market cap. Nvidia's almost 15 and a half times the size of AMD, which is ridiculous.
That really shows the size and scope of things. You're really 100% correct there. Supermicro, which really was so exciting on Wall Street, really had a FOMO following. Today, everybody's getting ready to see a real big leg down, 16% or so, right? Why? What are we looking at?
Yeah, so this was at one point, I mean, I feel like one of our early, really, I'd say, hype names that was surrounding all things AI, where they were one of the initial, really seen winners of all of the various, offerings. They also were in somewhat of a niche at the time that now they've diversified their business. So it's not necessarily, just a wafer fab cooling company like it once was seen as, but shares plunging 15%. And this was a bit more clear as we did see the server maker reported disappointing fourth quarter results and issued weak guidance. So we saw adjusted earnings per share miss at 41 cents. Revenue came in around $5.76 billion. That was below the $5.9 billion estimated. And that still did mark a 7.5% increase, but net income was 31 cents a share. That was down from 46 cents a share a year ago, partially due to the impact from U.S. President Trump's tariffs on goods that were imported into the U.S., now calling for, though, 40 to 52 cents a share in adjusted earnings and around 6 to 7 billion in revenue, which I also will note is a massive range. Usually we see, just like more specific revenue guidance. That's a pretty wide goalpost. But that was both figures were somewhat disappointing. I will say that the street analysts were looking for revenue of around 6.6 billion. So at the midpoint, that isn't a huge miss by any means. But they did see surging demand really kicking off in 2023 for their data center servers packed with those Nvidia chips for AI models and workloads. But growth has since slowed. So the company's avoided being delisted from the NASDAQ after falling behind. But that was following the departure of their auditor. So this is also a company that's been flagged with significantly bad news as far as Supermicro specific missteps. And that also was, a huge reason we started to see some of this confidence start to wane. But that is at least in the rearview mirror. These results, though, not really doing enough to ignite any of that enthusiasm. We've seen shares still up 88% so far in 2025, so it's not like we've underperformed by any means, but it's also volatile. I'm not frankly surprised to see this massive of a move, as options market were already implying some big volatility in Supermicro.
All right, Jenny Horne, thank you so much. Great to see you this morning. A slew of names in focus. Really appreciate it.